Welcome to Cashflow Lab, the podcast where we decode money, markets, and the mindset behind financial freedom. Today, we're doing a deep dive into something really fascinating: why most millionaires think differently, and, maybe more importantly, how you can start adopting that same mindset to, really change your own financial trajectory.
Absolutely. Because it's a common trap, isn't it, to think wealth is all about luck, or maybe having some incredible rare talent, or just landing that one super high-paying job.
Right, you hear that all the time.
But the reality, and what our sources really dig into, we're talking large studies, thousands of self-made millionaires here.
Yeah.
The reality is that it often comes down to something internal. How you think about money, how you make decisions day to day. It's not just about the paycheck.
Yeah, it's not just the income. It's the mindset. That's the hook, really. It's this mental operating system.
Exactly. An operating system. That's a great way to put it. It shapes everything, the daily choices, the emotional discipline, that long-term vision.
And that's our mission today, right? To unpack that system.
Yeah.
We want to show you that this isn't some exclusive club you can't get into, this mindset. It's trainable. It's not just something you're born with.
Totally trainable. So if we had to define it broadly, what are we talking about? The millionaire mindset.
Yeah.
It's really characterized by, I'd say, three core ideas: abundance thinking, a really strong long-term vision, and crucially, purposeful action.
Okay. Abundance, long-term vision, purposeful action.
Yeah. It's about actively cultivating beliefs that make you seek out opportunities, take calculated risks. We'll talk more about calculated or later, commit to your own growth, and practice pretty intense self-mastery. It's a whole framework.
It's the direct opposite, then, of what holds most people back, that fixation on, needing the reward now.
Immediate gratification, yeah.
Yeah.
Or the flip side, being paralyzed by scarcity. Constantly worrying there isn't enough, so you hoard what you have and you're too afraid to, say, invest it.
So the millionaire approach isn't about getting rich quick. It's slower, more deliberate.
Much more deliberate. It's built through relentless focus, disciplined action, day after day, all fueled by that long-term picture of, abundance. It's about how you view tomorrow, which fundamentally changes what you do today.
So the foundation isn't even money itself. It's these mental blueprints. You got to get the wiring right first.
Precisely. If the underlying operating system defaults back to scarcity or thinking only about next week, any money that does come in often just disappears. Spent quickly, maybe lost on a bad short-term bet. The blueprint have to be solid.
Okay, let's get into those blueprints then. Part one, the core psychology. What are these foundational beliefs and behaviors we're seeing in the research?
Right. These are the evidence-based patterns. Think of them as the internal settings that, when locked in place, lead to those compounding daily actions.
So what's blueprint number one?
The absolute game changer, I think, is abundance over scarcity. Seriously transformative. The millionaire mind operates from the assumption that opportunities, resources, solutions, they're basically infinite.
Infinite? That sounds bold.
It is, but think about it. They are primarily worried about running out of money. They're worried about running out of time to act on the next opportunity. They're actively hunting for ways to create value, not just guarding their current cash pile.
So if a regular person sees, say, a $10,000 expense as just money gone.
Right, a loss. A dip in their safety net.
The abundance thinker might see it differently, like an investment.
Exactly. Or maybe a necessary cost to solve a much bigger problem that could yield, 10x that down the line. It reframes the whole decision.
Okay. And that connects to the next blueprint.
Directly. Future orientation. This is huge.
Yeah.
Their decision filter isn't, what do I want now? It's, what's the payoff here in 5 years, 10 years, even 30 years.
30 years, wow.
Yeah. They consciously delay gratification. They'll skip the short-term thrill for the massive long-term gain. It's like financial chess, always thinking several moves ahead.
And if you're thinking long-term and you believe opportunities are everywhere, that must create some urgency.
It does. Which leads straight into the third blueprint. A strong bias toward action. You can't just sit around waiting for the perfect moment if you believe opportunities are abundant and time is ticking.
Right. No analysis paralysis.
None. The sources are clear. Millionaires tend to start before they feel completely ready. They launch, they get feedback, they iterate fast. Waiting for perfect conditions, that's just leaving potential gains on the table.
Okay, so act fast, think long-term, assume abundance. But action needs direction, right?
Absolutely. And that brings us to ownership and leverage. This is fundamental. Rich thinkers get that trading time directly for money has a ceiling, no matter how high your hourly rate is.
You eventually run out of hours in the day.
Exactly. So they prioritize things like owning equity, building assets, creating systems, things that work for them, multiplying their effort.
And leverage isn't just about borrowing money, is it?
No, not at all, though financial leverage can be part of it. And also about leveraging technology, leveraging other people's skills through delegation, human capital leverage, even leveraging intellectual property.
Like building a course that teaches thousands instead of tutoring one person at a time.
That's a perfect example. Systems thinking, multiplying impact. And finally, underpinning all of this, self-mastery, extreme self-mastery.
The internal governor.
That's it. It's what keeps the spending in check, keeps emotions from derailing strategy, ensures time is allocated according to those long-term goals. Without strong impulse control, the whole structure is shaky. That self-mastery enforces the delayed gratification needed for investing, for building, for everything long-term.
It sounds incredibly strategic, almost like a different wiring. Is it just learned behavior, or is there something more? What did those big studies, the ones with over 1,000 millionaires, find about their actual psychological makeup?
This is where it gets really interesting because the science backs it up. These traits seem to be drivers of wealth, not just, happy side effects.
Okay, like what?
Well, first, consistently higher risk tolerance. Now, this doesn't mean they're reckless gamblers. Far from it.
Calculated risk, like you said earlier.
Exactly. They're significantly more comfortable making calculated bets after doing their homework. They understand that risk is essentially the price of admission for potential high growth. They quantify it, accept it as a possible cost, if the potential upside justifies it.
How does that play out emotionally if you're taking more risks?
Great question, and it ties into the next key findings. They tend to have both higher emotional stability and significantly lower neuroticism.
Okay, break this down. Emotional stability.
It means they generally stay calmer under pressure. Market dips, business challenges. They don't panic as easily.
And lower neuroticism.
That means they're less prone to worry, anxiety, and negative thinking. They don't tend to catastrophize setbacks. So, if the stock market drops 10%, they're less likely to make a rash, fear-driven decision like selling everything.
Or stress spending, maybe. Buying stuff to feel better.
Exactly that. They manage stress internally and stick to the plan. That emotional steadiness is a huge advantage when others are making impulsive moves. It's the bedrock of consistency.
Makes sense. What else did the study show?
Higher conscientiousness. This one's pretty straightforward. They tend to be more organized, dependable, disciplined, and consistent. It directly fuels building those systems and habits we'll get into.
Okay.
And finally, a very strong growth mindset. This is crucial. They genuinely believe that their abilities, intelligence, skills, and especially their capacity to build and manage wealth aren't fixed. They believe they can be developed through dedication and hard work.
So the message here is hopeful then. If these are drivers and they're linked to things like mindset and conscientiousness, those sound like things people can actually work on.
Absolutely. It's not predetermined. You can start that internal renovation project literally today.
But let's flip it for a second. What's the opposite of this mindset? The thinking that keeps people financially stuck?
The default programming, you could say. It's the conditioning most of us get, focusing on limitations. You know the messages. Play it safe. Don't stick your neck out. Just save a little bit. Be realistic. Don't dream too big.
The scarcity and safety mindset. Seek security above all else.
Exactly. And the sources really emphasize the cost of that thinking. It's not just about missing out on wealth. It's about missed opportunities because fear won out over possibility. It's about potentially decades spent just trying to survive financially, never reaching your potential. It's about the chronic stress that comes with that.
So the millionaire mindset is an active rejection of that programming.
It has to be. It forces you to operate from a place of perceived power and abundance, even if your bank account doesn't reflect that yet. That mental shift has to happen first. The thinking changes, then the financial reality follows.
Okay, that lays out the internal landscape really well. Mindset first, but thinking isn't enough on its own. Let's move to part 2. The actual habits. What do these people do consistently? You mentioned Thomas Corley's study.
Yes, a fascinating 5-year study looking at 233 self-made millionaires. It identified 7 key repeatable habits. These are the external actions that come directly from that internal discipline and mindset we just discussed. Think of them as the daily routines that compound wealth over the long haul. Often kind of boring, actually.
The unsexy truth about wealth building. Okay, habit number 1. Something anyone listening can start right now.
Absolutely. Reading for self-education. This came up again and again. Non-negotiable.
But not just reading anything, right?
Right. It's reading for growth. Focused reading. Leadership books. biographies of successful people, deep dives into investing, business strategy, mindset development. They see reading as essential maintenance, like upgrading their own software constantly. Corley found most read at least 30 minutes a day.
And if you break that down, just 10 pages a day, that's maybe 15, 20 minutes for most people. Over a year, that's like 18 books.
Exactly. 18 deep immersions into new ways of thinking, new strategies. That is absolutely enough to start rewiring your brain and give you a serious edge. It's about consistent input leading to better output.
Okay, reading for growth. What's habit number 2?
Work passion. This goes a bit deeper than just, liking your job. It's about aligning your income-generating activities with the purpose you genuinely care about.
But wait. We often hear discipline trumps passion. How does passion fit in as a financial habit?
That's a fair point. Discipline is key, but passion acts as the fuel for persistence. Building wealth, starting a business, it's hard. There will be setbacks. Major ones, sometimes.
Guaranteed.
Right. And when those tough times hit, if you're deeply connected to the why behind what you're doing, finding the discipline to push through becomes, significantly easier. Passion is like the sustainable energy source for that long-term vision. Without it, quitting looks much more appealing when things get rough.
Okay, that makes sense. Passion is fuel for discipline. Now, habit 3 seems unexpected. Volunteering 5+ hours monthly. Why? How does giving away time help build wealth?
It seems counterintuitive if you're purely optimizing for dollars per hour, right?
Right.
But it serves some really strategic purposes.
Like what? Beyond just being a good person, which is valuable in itself.
Well, firstly, yes, it helps keep values grounded, prevents getting totally cynical or purely transactional. But secondly, and this is key from a strategic standpoint, networking. Volunteering often puts you shoulder to shoulder with other successful, purpose-driven people who share similar values. It's a natural way to build high-trust relationships, often leading to connections or opportunities you wouldn't find elsewhere. It's organic networking.
Interesting. Okay, moving towards more direct financial habits. Number 4.
A big one, multiple income streams. This is almost universal among the self-made millionaires studied. They rarely rely on just one paycheck.
Diversification of income itself.
Exactly. It spreads risk, obviously. If one stream dries up, you're not sunk.
Yeah.
But it also increases freedom and builds financial resilience faster. This could be side businesses, rental properties, investments kicking off dividends, royalties, advisory work, lots of forms.
And the key insight there, even if your main job pays really well.
Even then, building those secondary streams forces you to think strategically. You become an active allocator of your time and capital, not just a passive receiver of a salary. You're forced to look for ways to turn your earned income into passive or portfolio income.
Which accelerates the whole journey. Okay, habit 5 might surprise some people, given the stereotypes. Frugal lifestyle choices.
Yeah, this one really challenges the image of the flashy millionaire, doesn't it?
Yeah.
The studies consistently show that self-made millionaires are often incredibly strategic about their spending,
Living below their means.
often significantly below. They consciously avoid lifestyle inflation, where your spending automatically rises to meet your income. They're not buying luxury goods for status. They're prioritizing plowing money back into assets that generate more wealth.
So the real wealth is often invisible.
Very often.
Yeah.
It's tied up in investments, businesses, real estate, not necessarily parked in the driveway or worn on their wrist.
Yeah.
Their frugality isn't really about deprivation. It's about smart resource allocation toward that long-term goal.
All right. Habit number 6 gets back to time, which you said they view as their most valuable resource. Early rising, typically 3 hours before work.
This is a classic power habit. Why? Because it carves out protected, focused time before the demands of the day kick in.
Before the emails start flooding in.
Exactly. Those quiet morning hours are golden. They use them for strategic planning, deep learning or reading, focused exercise which boosts mental clarity, or uninterrupted creative work. Stuff that's high value but gets easily derailed once the world wakes up.
And for listeners, maybe the takeaway isn't instantly waking up at 4 a.m.
Probably not. But maybe just 1 hour earlier. Just dedicating 60 minutes to mindset work, planning your day, or tackling your most important task before checking your phone or email. That alone can be a huge advantage over time.
That small daily edge compounds. Okay, final habit, number 7.
The one that ties it all together. Consistent goal setting. They aren't just wishing for wealth, they're actively planning and tracking their path towards it.
Specific, measurable goals.
Yes, clear, actionable goals. And crucially, they review them constantly, daily, weekly. They track their progress, see what's working, what isn't, and adjust their course intentionally.
Is there a specific technique mentioned?
A common one is simply writing down their top 3 most important goals every single morning. Just that simple act keeps the big picture front and center, making sure the small decisions throughout the day align with where they ultimately want to go. It prevents that aimless daily drift. These habits, done consistently. That's how ordinary actions build extraordinary results over decades.
Okay, so we have the internal blueprints and the external habits. Now let's dig into part 3. The underlying mindset shifts. These are the deeper philosophical changes in thinking that actually drive those habits, right? Things you can start adopting even before the money shows up.
Exactly. These are shifts in perspective, thinking from a higher standard that enable the whole system to work. You can start making these shifts right now, regardless of your current situation.
What's the first big shift that separates this thinking from the default play it safe mode?
Shift 1. Growth over comfort. This is fundamental. Most people, often unconsciously, prioritize feeling secure and comfortable. The millionaire mindset actively prioritizes expansion, learning new skills, increasing capacity. They seek out growth, even embracing the discomfort that comes with it.
So discomfort isn't a sign to retreat, it's a sign you're stretching.
Precisely. The internal question changes. It's not, how can I stay safe, which is rooted in fear. It becomes, how can I level up? How can I solve bigger problems? That discomfort is just feedback that you're pushing boundaries.
That explains why so many successful people seem to constantly take on new challenges, learn new things.
It forces growth. And that connects right into shift 2, using time like a weapon.
Right.
To talk about time being valuable. But this shift is about the philosophy, viewing every hour not just as something to spend, but as a potential multiplier.
How so?
They're ruthless about auditing where their time goes. They invest it heavily in activities that compound. Learning, building those systems we talked about, connecting with people who can elevate them. They focus intensely on execution, avoiding getting stuck in endless planning or busy work that doesn't move the needle.
And that strategic time use is essential for shift 3, thinking long-term, always.
Yes. The engine of delayed gratification, we keep coming back to it. They're not just thinking about next quarter. They're playing chess 5, 10, 20 years out, sometimes even longer.
Wow.
This allows them to endure things others can't, market downturns, temporary business losses, the long slog of building something significant. They can ride it out because they're focused on the distant horizon. The internal check is always, is this decision an emotional reaction to today's stress, or is it a strategic step towards my massive future vision? If it's not the latter, they pause and reassess.
Okay. Shift 4 takes us back to basics. Money follows value.
Such a crucial understanding. They get that money isn't the goal itself. It's just a byproduct, a measure of the value they create by solving problems for other people.
So they don't chase dollars directly.
Not primarily. They chase becoming indispensable, solving significant problems effectively, serving people well. The question isn't, how can I make more money per hour? It's, how can I create more value? How many people can I help? How critical is the problem I'm solving? The income naturally follows that value creation.
That must provide a different kind of motivation, focusing on the value you deliver, not just the paycheck.
It does. It makes the work meaningful, even during the lean times, before the financial rewards fully kick in. Now, Shift 5 addresses that big topic we touched on earlier, managing risk, not fearing it.
Right, the calculated risk-taking.
This is the philosophical underpinning. They recognize that taking calculated risks isn't optional for significant growth. It's necessary. They move past the paralyzing question, what if it fails?
What do they ask instead?
They do their research, plan for contingencies, absolutely. But they ultimately accept that there's no 100% guarantee. The mindset shift is to stop obsessing over failure and start seriously considering, what if this works out spectacularly well? And I missed the chance because I was too scared to try. That reframing changes everything.
That's powerful, especially for anyone thinking about starting something new, but taking risks requires control, which leads to shift 6, financial emotional control.
Yes, this is where that self-mastery really comes into play. You can't manage risk effectively if your emotions are constantly hijacking your decisions.
Like panic selling or revenge trading.
Or even just retail therapy splurging when you feel bored, stressed, or insecure.
Yeah.
Or getting euphoric during a market peak and making overly aggressive bets. Millionaires cultivate the ability to detach their strategic financial decisions from their momentary feelings. They stick to their investment plan, their business strategy, regardless of the market's mood swings or their own internal state. It's treated as logical and strategic, not emotional.
And that control isn't just willpower, is it? It's supported by Shift 7, building habits, not relying on motivation.
Absolutely. They understand motivation is unreliable. It comes and goes. Inspiration is great, but you can't build wealth on feelings alone.
So you build systems instead.
Exactly. You build automated routines, the morning routine, the weekly financial check-in, the daily reading time, the workout schedule. You install habits that ensure the important tasks get done whether you feel like it that day or not. Consistency trumps intensity over the long run. Systems over fleeting feelings.
Makes sense. The environment matters too, right? Shift 8, surrounding themselves with higher standards.
Hugely important. Proximity is power. They are intentional about the people they spend time with, the mentors they seek out, even the books and podcasts they consume.
Auditing your influences.
Constantly. They actively seek out relationships and information sources that challenge them, support their growth, and elevate their thinking. They consciously limit exposure to negativity, cynicism, or scarcity mindsets. There's that old saying, if you're the smartest person in the room, you're in the wrong room. They live that.
Yep.
Their environment needs to pull them towards bigger thinking.
Okay, and the final shift, which feels like it underpins everything else. Shift 9, seeing themselves as the investment.
This is foundational. They don't just invest money in stocks or real estate, they consistently invest in themselves. Their knowledge, their skills, their health, their mindset,
Courses, coaching, books.
all that. Plus carving out time for reflection, strategic thinking. They see themselves as their primary growth asset, with basically unlimited potential for improvement. This completely reverses the common logic of, I'll invest in myself when I have more money.
The millionaire mindset says.
It insists, I will have more money because I invest relentlessly in myself and my capacity to learn, adapt, and execute. It's cause and effect.
Okay, wow, that's a comprehensive set of shifts. So if we pull all this together, the mindset, the habits, the shifts, it really seems to boil down to one core idea, doesn't it? Part 4, the intersection.
Yeah, I think the foundational principle is clear. Control your mind, control your future. It sounds simplistic, maybe, but the evidence suggests wealthy people have rigorously trained their thoughts and emotions to actively support wealth creation rather than sabotage it.
And that training has some surprising side effects, doesn't it? You mentioned research linking positive emotions to financial behavior.
Yes, this is fascinating. A major long-term study tracking over 10,000 people for decades found that traits like optimism, gratitude, and having a strong sense of purpose were actually powerful predictors of good financial habits.
More predictive than income level in some cases.
In some metrics, yes. Even more than their starting income. It genuinely flips the script. We tend to assume money buys happiness or security.
Right, get rich, then you can relax and be happy.
But this data suggests it might work the other way around more often. Cultivating a positive internal state, happiness, gratitude, purpose, seems to fuel the better financial behaviors that lead to long-term wealth accumulation.
That's the paradox flip you mentioned. How does that work? What are the specific connections?
Well, the studies found things like people who regularly practice gratitude tended to make better saving decisions and were better at delaying gratification.
Why would gratitude affect savings?
Gratitude shifts your focus from what you lack, scarcity, to appreciating what you have, abundance. This seems to lessen the psychological need to fill an internal void with external purchases, reducing that emotional spending. It strengthens the mental muscle for delaying gratification, which is the core of investing.
Okay. And purpose, optimism.
People with a clear sense of purpose were found to be more consistent and resilient investors over the long term. They had a why driving them through volatility. And optimistic individuals correlating with that lower neuroticism we discussed bounced back much faster from financial setbacks. They tend to view failures as temporary learning experiences, not permanent roadblocks.
So if someone listening is maybe struggling with debt or just feels stuck financially, the advice isn't just cut your expenses more. It might also be work on your inner world.
It strongly suggests that, yes, building internal security through cultivating things like purpose, gratitude, and optimism can actually provide the foundation for the disciplined external actions needed to change your financial reality. The inner work fuels the outer results.
And the engine driving all that consistent action, enforcing those habits day in and day out.
It comes back to mental discipline. That's the enforcement mechanism.
That ability to do what needs to be done, even when you don't feel like it.
Exactly. Discipline ensures the reading happens, the goals get reviewed, the investments continue systematically, even when life gets busy or motivation naturally wanes. It's the power to override impulses, delay gratification reliably, and ensure that bias toward action stays strategic, not just reactive. It's what makes the mindset stick.
Which brings us full circle. The mindset truly has to come before the money. It's adopting the thinking and the standards of the person you intend to become, financially speaking. That's what allows you to break free from old patterns.
It's that decisive internal commitment to operate from that higher standard, starting right now, regardless of the current balance sheet.
Okay, this has been a really packed deep dive. We've covered a lot of ground, from the internal psychology to the daily habits. Let's try to summarize the key takeaways for everyone listening. Part 6, the outro.
Sounds good. I think we focused on two main areas. First, those internal mental blueprints. Shifting from scarcity to abundance, committing to a long-term vision, and focusing relentlessly on value creation rather than just chasing money.
And then the second area was the external observable habits that compound over time. Things like daily reading for growth, consistent goal setting to stay focused, strategic frugality, building multiple income streams, and maintaining that discipline through things like early rising and self-mastery.
Right. And underpinning it all is the realization that the millionaire mindset isn't really a financial strategy first and foremost. It's more like psychological conditioning, training yourself to battle scarcity thinking, fear, and the lure of instant gratification every single day.
Like training for a mental marathon, not just a sprint.
Exactly. Training your thoughts with the same consistency. An elite athlete trains their body.
So here's a final provocative thought for you to consider. The millionaire mindset isn't about pretending you're already rich. It's about training yourself starting today to think, act, and grow like the person who will inevitably become rich through deliberate design and sustained discipline.
Well said.
Yeah.
And the practical step. Look back at those shifts in habits we discussed. Don't try to do everything at once. Pick just 2 or 3 things that really resonated with you.
Maybe it's waking up an hour earlier. Maybe it's writing down those top 3 goals each morning. Maybe it's consciously shifting your focus from risk avoidance to risk management.
Whatever it is, commit to implementing those chosen few consistently, like really non-negotiably, for the next 90 days. See what happens when you start compounding those small disciplined actions. That's how you begin building lifelong abundance from the inside out.
Thanks for tuning in to Cashflow Lab. We really hope this deep dive gives you some powerful tools to start re-engineering your own financial mindset. Follow the show, and please share this episode if you know someone else who's ready to start thinking like a millionaire. Remember, your financial mindset isn't just your attitude, it's your greatest asset. See you next time on Cashflow Lab.